S&P 500 most likely will see a 15% pullback by first quarter of 2025. Now, why do I say that? I have my reason, and I believe that it will actually happen because the S&P earnings yield now is at 4 years low level. Before that, once again, guys, do make sure that disclaimer apply as usual. Okay, first of all, let's understand what is going on in history. Right, so back in 1920s to 1927, we can see that the S&P 500 was rocketing all the way. And back then, we do know there was a president-elect, and that guy was Herbert, all right? He was the president back then. And of course, when the market hit another all-time high in 1972, it was Nixon that was the president. And of course, then again, in year 2000, when the market hit all-time high, we know that the Bush was the president. So what is the relationship here itself? Apparently, every time when the market hit all-time high and it's a president-elect, usually that's where the market may actually pull off. So which means that right now, right, if you look at the numbers here, you can see that the US interest rate, the 3-month T-bills, are showing that we may be at a point whereby the market may come off. And of course, you look at it right now, back then again, when the president decided to reduce tax, the market actually sells. And if we are now looking at what Donald Trump will be doing, most likely he's going to do the same thing, right? So Donald Trump himself is going to reduce tax, and the stock market is at all-time high. Hence, therefore, I believe that there will be a similar thing that's going to happen again. So of course, what is the more conclusive thing rather than just only a historical coincidence? Well, first of all, we must understand that Berkshire Hathaway has loads of money as he's been selling shares in the market and freezes all buyback. This is quite a big thing. And at the same time itself, right, we all know that he sold off Bank of America shares. And of course, we know that the earnings came out bad. And one thing to note, the delinquency rate itself is getting very, very high. And of course, this is not a good sign because we've seen it before. When this is actually moving upwards, that means that people have no means to pay. And if the market do pull back, this is going to be bad. So now if you look at the S&P 500, we are now at record high level. This is a very, very high level. Now, a lot of these market analysts are looking at 6,300 to even 6,500 for 2025. But the thing is this, what I don't understand is that the earnings now apparently is only 3.33%. So you're telling me that the S&P 500 will go up by another 10% from where we are right now, while the yield is at 3.33%. The medium itself is 6.65%, and yet we are now at the lower rack of the numbers. In fact, the last time we saw something like this was back in year 2009 and 10 during the Lehman Brothers time. So the average is actually somewhere around here. So guys, this is not a good sign if you ask me. To me itself, right, we are already way, way overboard. And I think that the market is due for a correction. Now, I'm not saying that it will crash. I believe that it will come off, and then that's where we can buy at cheaper level. All right. So we can see right now, there's some issue here itself. There's a very good chance that we may have a little bit of this potential this recession. Okay, why do I say that? Because let me just bring it in again. You can see right now that the numbers show very clear that the yield curve, okay, is showing that the probability of a recession is actually getting higher and higher. The last time we saw something like this was back in 1972, where we have a so-called recession. And then in 1979, we had a similar one back here. So now we are now at this point here, and I believe that it's going to happen again. All right, I think this is going to happen again. This is actually coming from the National Bureau of Economic Research itself. And I'm sure most of the these articles I read from this Bravos research, I think they are very, very good. I think I follow them quite a fair bit. And of course, at the same time, you can see right now that we always see that when the Federal Reserve actually cut interest rates, we know that we're going to enter a recession. So without a doubt itself, now we're going to have more rate cut, right, according to the Federal Reserve. Hence, therefore, I think they do know that there is a chance of a recession coming in. And of course, one thing to really hit it is when we all notice that when the rate cuts start to come in, we do know that the unemployment data will also start to surge. So at the moment now, we do have a rate cut coming in, but the unemployment still pretty okay. So let's just see. Now, if there's going to be any event or any companies that goes down, then that is where the unemployment will surge. And when that happens, this is going to hit the market. So now what I'm trying to say is that hopefully nothing catastrophic happened to the market or the world itself or any natural disaster. If not, right, this will actually make the whole thing, this whole jigsaw fall in place. And of course, right now, the most important thing is this: with so much funds entering the market. As a matter of fact, right now, based on the last statistics from Bloomberg, $913 billion have been flowing into the US ETF. That's a reason why the stock market is going up so high. But the last time we saw this was back in 2021, okay? And of course, we see another surge back in 2017. So if we go back, whereby when we look back at what happened in the post years after a huge amount of money goes into the market, you can see from here now that back in 20, let me bring it in. Okay, back in 2018, after a lot of money came to the market, we have the high. And of course, after that, we saw the market coming down within the next 3 months, down by 12%. Okay, that was what happened in the January 2018 onwards for the next 3 months. And of course, it happened again. That's what you mentioned. Again, back in year 2022, the market was all the way going out, huge lot of money coming in. And then the next year, we had the initial drop of 18%. Wow, that's a lot of money gone within the period of time. So now the thing is this: we are 1 month away from the cutoff of the year. I suspect that this may actually happen. The market may be going up a little bit more, and then we may have a pullback. Okay. Now, this pullback, like I say, I'm expecting between 10 to 15%. Then after that, who knows? The market may get sideways and we may go for all-time high again. Now, the thing is this: I still believe that the Dow Jones will eventually hit 48,000 to even 50,000 in the years to come. But at least right now, let's have a pullback first that I think the market is waiting for. Because every time a pullback comes in, after it bottom out, you have a new high. It happened again. So I think that will likely be happening over the next few years. All right. So it's something that we need to take note. And of course, with that itself, thank you very much for watching this video. I'll see you guys. This is Cal signing off. Take care. Have a great day. Bye-bye.